Hello, this is Kirk Lynch, Associate Professor of Accounting at Sand Hills Community College. Today's lecture will discuss payroll and the basics of calculating payroll for a business. Specifically, we will calculate gross pay, Social Security and Medicare withholdings, and net pay. This will only be an introduction to the topic of payroll, as I devote an entire semester's course to payroll to cover all the details required to master this process. Payroll is the process of calculating an individual's gross pay, calculating the required and voluntary withholdings to result in net pay, also known as take-home pay. The withholdings become liabilities for the employer until they are paid to the proper recipients. State, federal, and local governments are the recipients of taxes that have been withheld. Medical insurance providers, charities, and savings plans are other possible receivers of liability payments from the employer. This slide shows a list of potential liabilities that an employer may be required to withhold from an employee's paycheck and subsequently pay on behalf of the employee. For our purposes, we will calculate the Federal Insurance Contributions Act Social Security, also known as FICA Social Security, and the Federal Insurance Contributions Act Medicare, also known as FICA Medicare, or combined also known as FICA taxes. Other withholding amounts will be given in this problem and other problems that you have to calculate for this particular course. The calculation of federal income tax, for example, is beyond the scope of this course, but if you have an interest in that, we do discuss that calculation in the payroll class that I mentioned earlier. Social Security and Medicare withholdings are calculated as a percentage of gross pay. This tax is reevaluated each year and the percentages change. Most textbooks use 6% for Social Security withholdings and 1.5% for Medicare withholdings. The actual rates will vary slightly from these, and the current rates can be found on the irs.gov website. The Social Security tax is capped or limited to the first $100,000 or so of each employee's earnings. Again, this number goes up with inflation, but for simplicity's sake, most textbooks use $100,000 as this limit. Again, the actual threshold for Social Security in any given year can be, again, verified at irs.gov. Social Security tax for our purposes will be stated as 6% of the gross pay of the first $100,000 that an employee earns. After that, no Social Security tax will be paid for the remainder of the year for that particular employee. The tax is renewed each year, so once the fiscal year ends, the employee has reached their threshold of earning $100,000 in 1 year. That would start over, and the employee would again be paying Social Security taxes the following year up to the stated threshold for that particular year. This particular tax is the only employee tax that has an upper limit threshold that once the threshold has been reached, the employee no longer is required to pay that tax for the remainder of the year. The first step in getting to net pay is to calculate gross pay. Federal law states that any individual working more than 40 hours in 1 week must be paid overtime of 1.5 times their regular pay. There are a few exceptions to this law, however, those discussions are left to my payroll class. For the purposes of this class, any hours in excess of 40 in 1 work week will be paid 1.5 times their regular pay. The Fair Standards Labor Act, or FLSA, which requires overtime pay as described above, also set the minimum wage requirements that have been discussed in the news recently, and that rate has been rising over the last couple of years. Once gross pay has been established, required withholdings can be calculated and subtracted from gross pay, which will establish the net pay for an employee, and also known as their take-home pay. These required withholdings become liabilities for the employer until the employer pays them on behalf of the employee. The easiest way to explain the process to calculate gross pay is through an example. And here we have some facts. If Betty works 45 hours in 1 week and Betty makes $10 per hour, her gross pay is calculated as follows. 40 times $10 per hour for the 40 hours worked for regular pay rate equals $400. And to that we add her overtime hours times her overtime rate. Her overtime rate is calculated by taking her regular pay rate, multiplying it by 1.5 times, and we get her overtime rate of $15 per hour. So Betty worked 5 hours of overtime at her overtime rate of $15 per hour, and 5 times 15 is $75. So Betty has earned $400 of regular pay and $75 of overtime pay, and 400 plus 75 makes her gross pay of $475. This gross pay is the starting point for calculating the various liabilities that we discussed on the previous slide, and we will demonstrate in calculating on the following slide. So the next step in getting to net pay after we've calculated gross pay is to calculate the withholdings for each individual. Now we will calculate Social Security and Medicare taxes which were based on a percentage of gross pay. We'll be using Social Security rate of 6% and Medicare tax rate of 1.5%, and as discussed earlier, some textbooks vary from these rates. Don't be confused by the various rates that are given in other textbooks or problems. For your purposes, you'll be given the rate to use for homework and exam questions, and typically it will be 6% for Social Security and 1.5% for Medicare. Any other tax rates would also be given to you for that particular problem. Note that all taxes are based on gross pay, or a percentage of gross pay. So back to our example here. Our gross pay was stated in the previous slide. Betty had made $475. And so the first thing we're going to do is calculate her Social Security tax from her gross pay. And all we do is take gross pay times 6% in this case, which is the percentage we'll be using to calculate Social Security tax. And $475 gross pay times 6% shows a tax for Social Security for this paycheck for Betty of $28.50. Now Medicare is also calculated on gross pay, and the rate is 1.5%. So if we take our gross pay of $475, multiply it by 0.015, which is 1.5%, we get an answer of $7.13 as Betty's Medicare tax liability for this particular paycheck. Now just a little bit of note about this $7.13. It's due to a rounding that we get to $7.13, and the rule for our rounding is that we calculate our decimal to 3 places and we round to 2 places. And if the third place of the decimal is a 5 or more, we round up. If it is a 4 or less, we round down. And so if we do the actual math in this particular problem, $475 times 0.015, the answer we get is 7.125. Now by following our rounding rules, the third decimal place is a 5. A 5 or more means round up, and that's how we get to our answer of $7.13. Now it should be noted that the Social Security tax is only required on the first $100,000 per our previous discussion. Now we're not given the amount that Betty has made year to date to determine if this paycheck or some previous paycheck would cause her to exceed this threshold of $100,000 in a year. But at $10 per hour, it's probably a safe bet that Betty will not make over $100,000 in this particular year. Now, to understand how this threshold works, be sure and view the sample payroll problem that's available on the website to see how a threshold, once it's exceeded, is calculated. Now, if we're given additional withholdings in our particular example here for federal income taxes, we see on our slide here that federal income tax, also seen as FIT here, is $62 in this particular paycheck. And our state income tax, stated as SIT here, SIT, is $15. And our medical insurance is given to us as $10 for this paycheck. then we can get from our gross pay of $475 to calculate what net pay will be for this individual for this particular paycheck. And so the formula that we can use to get there is to take gross pay, subtract Social Security calculated withholdings, subtract Medicare calculated withholdings, subtract our given amount for federal income tax, our given amount for state income tax, and our given amount for medical insurance. And those numbers are $475 minus $28.50, which we calculated previously, minus $7.13, which we calculated previously, minus $62, which was given to us, minus $15, which was given to us, minus $10, which was given to us, and we get to net pay for Betty for this particular paycheck to be $352.37. Now, this net pay amount is what the employer will receive on their paycheck, also known as take-home pay, and the withholdings that we've calculated and have been given to us become liabilities for that employer that will pay them on behalf of the employee as they become due to the various governmental agencies and other withholding entities. I hope this discussion has been helpful. Be sure and view the lecture on the payroll register and the journal entries for recording liabilities, as well as the sample problems that we'll have recorded available for you to view. I look forward to our future meetings.